private market value, which he uses to pick a stock after calculating what he figures the entire company would be worth to a knowledgeable outside buyer. Mario has been an excellent investment himself. He founded the firm that bears his name 25 years ago, and it now invests assets in the neighborhood of $26 billion, which is a very nice neighborhood indeed. Mario, through the first quarter of this year, your flagship Gabelli Asset Fund gained an annualized 7.5% over the past 3 years, while the S&P 500 was losing an annualized 2.5%. Is this just that mid-sized so-called value stocks came back into fashion?
Well, what we try to do is take advantage of opportunities by kind of looking at companies that we like, that are event-driven, and generate an absolute return. What we're trying to do, Lou, for our clients is to earn 10% real plus inflation after tax. We think the overall...
A modest ambition.
Well, we've done 20% over the first 25 years, but we had a terrific tailwind. With the headwind in front of us of high valuations, we kind of think we'll be able to do twice the overall market. I think over the next 10 years, the market's earned 6 to 8%. We should be able to do about 15.
What are you doing that most investors are not doing?
I think a lot of investors are following our style. I mean, this was started by Graham and Dodd in the 30s, Lou, and we just continue that. That's 70-odd years of successful investing. You know, plodding through the mud quite well at that. One step at a time, one stock at a time. We find companies that we like in areas that we like, and I'll give you a bunch of examples.
Please do.
Well, of course. I start off my simple things like Thomas Industries, Thomas Nelson, Thomas & Betts. These are 3 companies, Lou, that are all small cap, that are all ripe for takeovers. Thomas Nelson being a Bible manufacturer down in Nashville, stock's around $13. It's probably about 15 million shares, 200 million market cap. Thomas & Betts out of Memphis, Kevin Dunnigan does a terrific job, $23 stock. I think it's a transaction, and obviously Thomas Industries, which is in the lighting business. And I almost think it was in Louisville, which was the home of that famous race that you were talking about. Close.
Well, I don't want to be a doubting Thomas.
You shouldn't be.
We have some feisty viewers of our program, and I want to read you a couple of emails that I got, and I'll let you respond to
Let them
people.
doubt it.
Don't let the great Gabelli off the hook with Cablevision CVC. He's been hawking that one for years. It seems this young Dolan can't get it done. Your comment.
Well, I think that's a great place to start. First of all, I think the Dolans are right with regards to the Yankees. Even Leo Hendry's ready to capitulate. It's wrong to put the Yankees and have everyone pay $2, even though I know you would like that to happen.
I'd pay $3.
I agree, and we hope to charge you $3, but on a separate channel. The second part is, I think cable is a wonderful business. The stock is $23.4. It's been hit by a lot of dynamics. You're worried about the Enron, worried about the Tyco, worried about Adelphia, which is the old symbol was ADLAC, ADLAC, so we call it ADLAC. And I think this is a terrific buy. You should aggressively buy Cablevision. It's $23.4. We think the takeout value is $75. Lots of wonderful assets there.
Get me to a telephone.
I have it in my pocket.
Here's another one. Pulitzer Publishing Company. Pulitzer Publishing, Inc. Gabelli Asset Management owns 27.3%. Please ask your guest if he is after a Pulitzer Prize.
I would like to have that prize, and I think it'll come, Lou. I think it'll come when cross-ownership is implemented. That is, a TV station can own a newspaper in a given market. Pulitzer in St. Louis, the St. Louis Post-Dispatch, terrific new guy running it. Mr. Woodward has come along. Mike Pulitzer's been selling stock. We think we get $75 in a year and a half, 2 years. And it's part of what we like, which is all newspapers that are takeout papers.
Slightly more respectful, someone who notices your affection for cable and telecom wants to know if the significant debt of that industry concerns you.
Well, we think that is a negative if it doesn't have the cash flow to support it or the assets. And clearly in today's world, debt is looked on as half full. We look on it as half full. Sometimes we look on it as half empty. It goes company by company. If I have 3 times EBIT, earnings before interest, taxes, depreciation, coverage, I'm not concerned. If I have 7 and the business is turning south or it's being fragmented by competitors, you worry.
I know you don't waste time with short-term market forecasts, but how long do you plan to hold these stocks you're recommending?
Well, our holding period is 2 to 3 years. First, we want to go long-term. Secondly, we like postage stamp collectors. Some, like Lynn, which has gone public again, we've invested in it sometimes for as many as 10 or 20 years, Lou. So 3 to 5 year time horizon, is a pretty good hold. We started buying Pulitzer a couple of years ago, and many of the Thomases that you're doubting, we started a couple of years ago.
I'm just skeptical, not doubting.
Well, you should never doubt.
Let me turn you over to a totally trusting panel, starting with Liz Ann Sonders.
Mario, you've always been known as an investor that understands and really gets in and knows companies. In this environment, post-regulation fair disclosure, what has been your experience? Easier to get information, harder to get information from the company directly?
Well, the way we're structured, and the way I've always structured, because I started as a sell-side analyst 35 years ago and still cover industry specifics, and we have core competencies. So when we do auto parts, we know the customers, we know the competitors, we talk to everyone. Today, Mike Jackson at AutoNation was kind enough to share with me some insights. But it wasn't anything that had a decisional impact on a stock, Liz. It made me understand the dynamics, understand better how to handle change. And so FD has been terrific. It makes analysts instead of investment bankers and drag. It's time and even Spitzer, he started the ball rolling. So CFA, Chartered Financial Analyst, no longer has to have IBID after it, investment banker and drag. Let the analysts get back to be analysts. FD was terrific, and it works.
Mario, you're on the top of the hill. Flows into small and mid-cap value styles are just tremendous. Are you concerned that there's just too much money coming into your sector?
You know, John, that's a very good question. The numbers in small cap in all mutual funds at the end of March this year were about $190 billion. That was up from $130 billion a year ago, and small cap value got an incremental $35 billion. $190 billion is less than half of what you lost in owning one stock, Cisco, if you owned it from March of 2000. Now, my concern, no, what it's doing is terrific for America. It's terrific for entrepreneurs. The strength of this country is small businesses starting and creating jobs. And as analysts get to work again and look at small companies, and as money flows, they're going to find nuggets. And those nuggets are going to be the next Microsofts, the next Berkshires. So, no, I don't think it's a negative. I think it's, in fact, a major plus, and we're delighted to do it. But it's harder to execute on it because it's more work. But that's what we get paid to, work hard. And sometimes you'll find great stocks, and we find a lot of them.
Mario, the Federal Communications Commission is probably going to lift these ownership limits on cable and TV stations and newspapers. You just mentioned that Pulitzer might be one of those winners. What other companies would benefit when the FCC does this?
Well, you found most of the entrails. First, the number of owners that viewers that you can have in cable or television is going to be changed. The fact that a TV station can own a newspaper, a cable can own a TV. In television, we think the companies that are taken over are Paxson. The stock's $10. We think that one could happen very quickly. Sinclair Broadcasting has a lot of wonderful assets. Liberty Corp sells at $45. We think it's worth $65. We think HIP owes it to a shareholder. In fact, Hain, you should sell your company. In the newspaper area, in addition, we like Media General being sold out because as we're buying it at $65 a share, we're closed plus or minus, we get Tampa for free. So there's a lot that will happen. But we also like cable networks. Rainbow Media, we think there's a pot of gold there at $25. We are aggressively buying Rainbow.
Mario, we only have a minute or so left. In addition to sweating the details, which you've emphasized for us tonight, you're a man of vision. You like to spot trends. Tell me some trend you haven't mentioned yet that you see coming down the pike.
Well, very quickly ticking them off. I think when the consensus came out, the Hispanic population in the United States was growing exponentially. I think playing that by owning Televisa, by playing companies, and it's not a derogatory name, Lou, it's Bimbo's, which is a bread company in Mexico. So you should own a Bimbo in your portfolio. But as a surrogate of that, I think Bimbo's eventually buys Flowers. We own Flowers, and we like that. Other themes are consolidation, cost containment.
We get Flowers to Bimbo's.
I think that's always makes sense, Lou, and you should practice that tonight.
Okay.
In that context, we like the cost containment. Companies that can reduce cost, quality of life, quality of water, Watts Industries, small, Cranes. So that's kind of what we're looking at.
And what would you avoid?
Not sending Flowers to Bimbo's. I would think that. I also like the utilities area. What we do, Lou, is very analytical. We focus on areas that we know, and what we know is, and that's where we like to buy.
Always a joy to talk with you, Mario Gabelli. Thanks very much for being with you. Thanks, too, to our panelists. Next week's guest is Ken Huebner, who has made big money this past year in both small companies and in real estate. And, folks, please do know how grateful I am for your thousands of wonderful emails continuing to welcome us back on the air. It is truly overwhelming, and we're going to do our darndest to try to deserve your loyalty every single week. Meanwhile, this has been Louis Rukeyser's Wall Street. Good night.
Louis Rukeyser's Wall Street is produced by CNBC in association with Rukeyser Television. The program is being distributed to public television stations by WLIW New York and has been brought to you by Occidental Petroleum. From exploring for new oil and natural gas resources to striving to protect the environment, Occidental Petroleum is bringing a new energy to energy solutions. And by A.G. Edwards, providing a full range of personalized financial, retirement, and estate planning services. A.G. Edwards, trusted advice, exceptional service. And by Oppenheimer Funds, insight, teamwork, discipline. The strategy Oppenheimer Funds uses to achieve long-term performance. Oppenheimer Funds, the right way to invest. Louis Rukeyser's Wall Street is produced by CNBC in association with Rukeyser Television. They are solely responsible for its content.